What happens when the biggest money manager on the planet, we're talking trillions of dollars, makes a massive move into crypto? Well, we're about to find out. BlackRock, the world's largest asset manager, just publicly committed a stunning $589 million to Bitcoin and Ethereum. This wasn't some quiet portfolio adjustment. It was a loud and clear declaration that has the entire financial world talking. So the big question is, what are they really up to? What does this mean for the future of crypto? And more importantly, what does it mean for you? This isn't just another headline. It's a signal flare from the heart of traditional finance. In this video, we're going to pull back the curtain on this massive commitment, break down the strategy behind it, and explain what it signals for the next chapter of digital assets. We're watching the playbook of the world's most powerful financial institution unfold in real time, and you need to understand every single move. So let's break down exactly what we know. BlackRock has committed a staggering $589 million to the crypto market. Now, the really interesting part is how this investment is strategically split between the two titans of the digital asset world, Bitcoin and Ethereum. While we don't have the exact dollar-for-dollar breakdown, this dual-pronged approach is the first major clue into their thinking. It signals that BlackRock's strategy isn't just about digital gold. It's also about owning a piece of the foundational infrastructure for a new digital economy. The move provides a massive vote of confidence in the regulated platforms that are building compliant bridges between Wall Street and the world of crypto. This wasn't a shadowy back alley deal. It was a commitment made through the front door of the regulated ecosystem, underscoring the growing importance of established US-based players as the on-ramp for serious institutional capital. The timing is also critical. This commitment comes during a period of market consolidation, not at the peak of a wild bull run. This is classic institutional behavior. You acquire what you believe are valuable assets during calmer periods, long before the retail frenzy kicks in. It's a move based on long-term value, not short-term hype. This wasn't a chase. It was a calculated positioning for what they see as the next major market cycle. This all aligns perfectly with the powerful surge in BlackRock's own crypto products. Their iShares Bitcoin Trust, IBIT, and their Ethereum offerings have seen significant net inflows. This shows a perfect harmony between their direct market strategy and what they're offering clients. They aren't just telling their clients crypto is the future. They are putting their own capital to work to secure that future, amplifying the very demand they're servicing. The entire machine is working together, and this $500 million commitment is the clearest declaration yet of their intentions. Okay, so we know what BlackRock did, but why does it matter so much? To really get it, you have to understand who BlackRock is. This isn't just some hedge fund. They are the world's largest asset manager with trillions of dollars at their command. When they make a move, it doesn't just make waves, it redirects the entire current of global capital. For years, the crypto space has been waiting for this kind of institutional validation. Well, this is it. This $589 million commitment is a key part of a much broader story. The validation of Bitcoin and Ethereum as legitimate asset classes, not just speculative gambles. At the highest levels of finance, the conversation has officially shifted from if institutions will adopt crypto to how and how fast. BlackRock is showing them the way. Their most powerful weapon so far has been the iShares Bitcoin Trust, IBIT. Since its launch, IBIT has been an unprecedented runaway success. The fund has grown into a juggernaut, single-handedly dominating a huge slice of the Bitcoin ETF market. To put its meteoric rise into perspective, IBIT has started to challenge legacy gold ETFs in terms of institutional appeal, something that would have been unthinkable just a few years ago. This isn't just about a new product. It's about recalibrating the very definition of a safe haven asset for the 21st century. The SEC's approval of Bitcoin ETFs in early 2024 was the starting gun, and BlackRock has masterfully run the race ever since. That regulatory green light unlocked a torrent of institutional capital, leading to a massive acceleration in crypto flows from big money players. The ETF structure effectively removed the career risk for portfolio managers, giving them a compliant and easy way to get Bitcoin exposure. BlackRock didn't just enter the game, they built the most efficient engine and are now winning it. But here's the most powerful signal of all. BlackRock isn't just selling this idea to its clients, it's buying it for itself. When an institution with the brain power and risk management of BlackRock allocates its own capital to an asset class, it shows a level of conviction that a marketing pitch could never achieve. It's the ultimate act of eating your own cooking, signaling a deep data-driven belief in the long-term value of these assets. This move is basically checkmate in the debate over crypto's legitimacy. The world's biggest and most influential asset manager has now fully integrated Bitcoin and Ethereum into its core strategy. They're leading the charge, and the rest of Wall Street is being forced to pay very, very close attention. The financial world is being redrawn right before our eyes by moves just like this one. If you want to understand the strategies of the biggest players and stay ahead of the market, take a second to hit that subscribe button and turn on notifications. This channel is all about giving you the analysis you need to navigate this new era of finance. Don't miss what's coming next. So, if BlackRock's Bitcoin play is about capturing the digital gold narrative, what does their big bet on Ethereum tell us about the future? The commitment to ETH is arguably the more forward-looking part of this story. It signals that institutions are starting to see Ethereum not just as another crypto, but as the foundational technology for a whole new financial system. There are clear reasons for this growing focus on Ethereum. The network's tech upgrades, especially its successful switch to proof of stake, have completely changed the game. This made the network more scalable, secure, and way more energy efficient, which gets rid of a major headache that kept big institutions on the sidelines. It also introduced deflationary pressure on ETH's supply, making it an even more attractive asset from a financial standpoint. This tech maturity has been matched by growing regulatory clarity, especially with the launch and success of Ethereum ETFs. We've seen a surge of institutional interest in these products this year. For a firm like BlackRock, having a regulated ETF is a critical piece of the puzzle. It creates a simple, compliant, and liquid bridge for trillions of institutional dollars to flow into the Ethereum ecosystem. But the real long-term play for Ethereum is its role in decentralized finance, or DeFi. Ethereum is the programmable base layer where thousands of applications are being built. Everything from lending platforms and exchanges to NFTs and stablecoins. Institutions are realizing that owning Ethereum is like owning a piece of the core real estate of the next generation internet. It's the engine, the fuel needed to power a decentralized digital economy. This is why BlackRock is making an explicit bet here. They're investing in the infrastructure itself. However, BlackRock's vision goes way beyond just buying and holding. Their ultimate endgame seems to be tokenization, the process of putting real-world assets onto a blockchain. This is where their strategy gets truly revolutionary. Their BITL fund is the flagship project here. BITL is a tokenized money market fund that has already grown into an impressive multi-billion-dollar initiative. They even recently expanded the fund onto a new blockchain, showing they're committed to building everywhere. The BITL fund is proof that BlackRock sees blockchain not as a speculative sideshow, but as the future of financial plumbing. By tokenizing assets like bonds, they can make settlements nearly instant/administrative costs and create more transparent and efficient markets. Their roadmap clearly points toward expanding these tokenized products. This means we're leaving the era of crypto as a retail-driven hobby and entering a new phase of institutional-led growth. BlackRock is acting as the ultimate gatekeeper, using its trusted brand to bridge the old world of finance with the new one. Their success is creating a blueprint for other giants to follow. They are de-risking the entire space, and their actions will likely trigger a domino effect, forcing other asset managers and funds to speed up their own crypto plans or risk being left behind. When you piece it all together, what we're seeing is more than just a big investment. It's a fundamental rewiring of the financial order. BlackRock's $589 million crypto commitment, their dominance in the ETF space, and their pioneering work in tokenization aren't separate events. They are three pillars of a grand strategy to plant their flag right in the center of the future of finance. They've validated Bitcoin as a top-tier institutional asset. They're betting on Ethereum as the backbone of the new digital economy. And they're building the tokenized rails that the next generation of assets will run on. They are systematically tearing down the walls between traditional finance and crypto, creating superhighways for capital to flow. Their actions send a clear signal. The time for questioning crypto's survival is over. We have entered the era of institutional adoption, and it's happening much faster than anyone predicted. The playbook is open, the pieces are moving, and the world's largest asset manager has made it crystal clear which side of this revolution they're on. The implications here are massive, and we're just scratching the surface. With BlackRock making such a clear pivot towards Ethereum and the infrastructure of tokenization, where do you see the biggest opportunities over the next few years? Will Ethereum's utility help it outperform Bitcoin, or will digital gold stay king? Let me know what you think down in the comments. And if you want to keep getting ahead of the curve with deep dive analysis on the institutional moves shaping our financial future, make sure you're subscribed with notifications on. Thanks for watching, and I'll see you in the next one.